Hello, everybody, and thank you for tuning in to the Ron Paul Liberty Report. With us today is Chris Rossini, our co-host. Chris, welcome to the program.
Good morning. Great to be with you, Dr. Paul.
Good. We have lots to talk about because there's a lot of money slushing around out there, and people are getting nervous. Some people say, well, all we need is Paul Volcker again to raise interest rates and get the pain and suffering over. Quite frankly, I don't think even Paul Volcker could rescue things today. I was in Congress at the time and knew Volcker pretty well, and he got a lot of heat for what he was doing. But in a way, he did give it some bad medicine, bad recession. Even it took a couple years after Reagan was in office before things got going again. But I think conditions are much, much worse than they are now. Much more debt, so much malinvestment. And the sentiment is for don't touch the interest rates, don't allow any creeping in of the market saying interest rates ought to be higher. Because they tried that a couple years ago. You know, they thought we'll reduce the balance sheet a little bit and let's get back to normal. And guess what? The stock market didn't like it. Now, the one thing people have to remember what's going on here is 1987 was a big year in the stock market. It went down like 20% in one day. And that was 87 stock market crash. And Reagan was president. And after that, after it settled, they organized a little committee. It was called the Presidential Working Group on Financial Markets. Most people gave it a nickname, the Plunge Protection Team, which meant don't ever let the stock market plunge. Your job is to keep the stock market up. And that team is made up of the king of that team is, the Federal Reserve, and then there's the Secretary of Treasury, then there's CFTC and SEC. There's four of them. But the ones that have the most clout, I would say the Fed and the Treasury. The others do it too, but they're constantly interfering in the market. So their responsibility, and they admit it. There's no hiding anymore. Their job is to keep the stock market up. The original intent of the Federal Reserve was to deal with prices going up. That's what the inflation that they look at. And the CPI is going up too fast, and it's up to the Fed to do something. Or if the unemployment rates start climbing, then the Fed has something to do with it. Then they added on regulation and manipulation of long-term rates, and they needed that to accommodate QE and to take care of the overnight rates. And now, of course, it's to regulate everything, the whole economy, and they have caused all the harm, so I guess they are responsible for it. But quite frankly, when they talk about giving it some medicine, maybe like yesterday when the market went down, and even today they hinted about maybe we'll start raising interest rates in 2004. Oh no, 2003, and that panicked the market. And even today, Ballard from St. Louis Fed said maybe even next year we'll do that. So now the market's down again. Well, true markets don't quite work like that, but markets that are totally regulated and manipulated, and the anticipation is on one or two words or on a phrase, and all you have to do is look at that, and if you're making a lot of money and know what's going on, you know how to interpret those little phrases, and it's not really, and that's difficult because that means that you're prophetic in understanding human action. You know exactly how people will react. But the markets, the preponderance of the people in the market know a little bit about these tip-off words of what they say and what happens in the market, and then they can't anticipate the change. But eventually they run out of steam and they can't do it. And my first thought when I was looking at all this yesterday and even today, I said, not only is it too little too late to tinker like this, it's the wrong medicine. So even if you'd have come earlier and did more of it, but no, it's the wrong medicine because they are not going to give up. Chris, what they're trying to maintain really is the spending programs, the welfare warfare state, the political powers, the deep state takes care of it, the whole works. They think they can do it. And the eventual answer should be, sound money and a free market. And that's what we work on. We work and promote it and try to get people to say that they would be better off And most people think, well, the Fed takes care of us. They create that money and we get low interest rates and we can buy a house. But right now, Chris, compared to what it was like in 1976 when I first went to Washington, compared to now, believe me, there's a lot more interest in the Federal Reserve and there's a lot better understanding, but still no easy answers, because the worst part about it is even if you do come around to understanding, the immediate pain and suffering is more than any politician could handle. They did handle it, Volcker handled it, and they got through that, but I think it was the last time, because since then it's always been papered over. And that means that eventually the destruction of the dollar and prices soaring, and that was part of our problem this week, is CPI was going up a little faster than they had hoped. They worked for years and years, 2%, we need 2% price rate inflation, and it went up 3.5. Oh my goodness, but we'll take care of that. It's just transitory. It's just for this year. So that's it. But there will be an awakening that the current type of policy of spending and deficits and printing money, it will end. And I hope, Chris, that we can contribute a little bit at least to what we should do to develop a better monetary system.
I agree, and I hope so too, Dr. Paul. And as our viewers know, there should not be a Federal Reserve that fixes prices or creates money out of thin air. But it does exist and it does do these things, so we have to deal with it. But what does it mean to the average person when they hear them say, oh, they may start raising rates in 2024 or 2023? It's really meaningless. It means nothing. It's like when you hear politicians say that they're going to balance the budget in 10 years. No, they're not. A new government's going to come in and they'll say, oh, we can't balance the budget. Don't you know that XYZ is going on? We have to spend. So it really doesn't matter what the Fed says about 2024 or 2023. The purpose is it's a tactic. It gets you thinking out years in advance instead of right now. It makes it seem that right now they have things under control. They do not. So they say, everybody just sit tight. We'll worry about inflation in 2023. Well, in the political world, in the whole political world, not just the Fed, words mean nothing. Only actions matter. And when you look at actions only, the Fed is saying today there's going to be more inflation, higher prices, and a lower standard of living for all Americans. And you'll never see that mentioned on television.
You know, what I find interesting is there was a lot of truth between the lines there, but the way they say it and what the markets want to hear, they're sort of brainwashing the thing. Oh, they wouldn't do it to us. They wouldn't do it to us. And so it doesn't always happen, and that is understood by understanding human action. People can't be totally predictable, and that is why you have some results that they didn't plan for. The one thing that they should look at more, and I mentioned already about a couple of years ago, they tried to shrink the balance sheet, and the stocks were going down, and overnight rates shot up to 10%, and they threw in the towel, and they just quit doing that, and then they went back to overnight rate. But the government, is playing more tricks. What they would do to do this is they did QE. They bought bonds, and they buy all kinds of bonds, good ones, bad ones, even U.S. bonds. And then they have if they buy those or sell them, then they have the cash to prop up the markets. And that's what they did. But nobody on a daily basis, at least, I didn't hear anybody, talking about that. See, the overnight rates, sometimes they'll break through and give you an idea of what the markets say. Sometimes there is a credit card rate that might give you a better hint, because not everybody gets 1 or 2%. And certainly it's only the saver that puts the money in the bank. They get less than 1%. But the others pay a lot more. And so there are some real rates. The market really eventually comes through. And that's what I've always said about the gold, because they've rigged gold for a long, long time, for 40 years they kept it at $35 an ounce, and now they still do that. So because the gold is a test of what the Fed is doing. It is a report card on the Fed, and they know it too. So that's why they're interested. Under rocky conditions, they're more likely to knock the price of gold down because if let's say the free market, and I don't know this, so I'm just assuming that if it happened, if they had all hands off and they never touched gold, and they did what they did yesterday, and they made that announcement, and gold, instead of dropping $100, went up $200, believe me, there would be ultimate panic, and therefore their interests are very, very much involved in making sure the perception and the price of gold, stays down. And ultimately it'll break through again. It'll come back up, just like when the gold finally was released to the market in 1971. It went from $35 an ounce up to $800, which is a huge increase. But the market did that. They didn't make the decision, oh, let's do this. No, it was a demand, because it became a black market in gold, and it was defying the government regulation and our U.S. government doing this to try to maintain support for the reserve currency. So the reserve currency, is very, very important. And I thought one thing, Chris, might be a little bit interesting, because I can't prove it one bit, but it's suspicious. There's a lot of China bashing going on. They have this money, and they start buying stuff and competing with us, and all kinds of stuff going on. And yet they have the dollars, because we print them and we buy their stuff, and they take them and save them and invest it. And guess what? There's been plenty of stories, and I happen to believe the stories, that China is interested in maintaining or developing a reserve currency of the world that might have some gold involved in it. So we have all this mischief. I believe they're capable and very anxious to keep the price of gold down. Guess who might be buying the gold right now? It might be those enemies that everybody can't stand, and China may be buying that gold, and people say, boy, we shouldn't allow them to do it. But they might be buying the gold because we printed so much money and we spent it over there. So, but things will work out, but I'll tell you what, not soon will they really sit down and talk about serious changes in the monetary system and deciding that we have to get away from fiat, because it's the fiat is the real problem.
Right, Dr. Paul. And using fiat created this whole mess. And we could go back to 1913 with this founding of the Fed, because that cemented big government onto America. That put it in place, and we're now stuck with it. It's now $28 trillion in debt after just 100 years, we're talking. And somehow, magically, they're able to spend trillions and trillions of dollars that they do not have. How can this possibly be? Well, what happens is the government creates treasury bonds, and it needs somebody to loan the money. Well, the Fed hops in, it creates dollars out of thin air that don't exist, and poof, now they exist, and they buy the treasury bonds. Now the government has money. So this is how big government has been shackled onto America and has taken away our liberties. This, more than anything, has decimated limited government in America. And this is why our regular viewers, they may wonder, every week almost, you're talking about the Fed. This is the root of the problem. All the other issues, and some of them are important, they're branches on the tree. The root of the problem lies in a government that can finance itself by having a central bank that just prints money out of thin air. And we have nothing to say about it. Doesn't matter what we think. So it's very critical to understand the root of the problem, which is why we always talk about the Federal Reserve.
What is amazing, though, and we have to understand this, you described it very well. It's too much money, and inflation goes up. There's malinvestment and debt and all these kind of things. There's a dependency on the welfare, warfare state. They need it. A lot of special interests that do benefit it. And even the average person would say, well, I got to get my salaries up, and I got to compensate. And they'll always come up, and they say the solution to this is we need more money. Because obviously, if bread goes from $1 to $2, they don't have enough money. So their interpretation is, Well, I need more money, so send me more money. And that, of course, is what they've done here in this past year or two, like never before. So think of the inflation that was going on there of the money supply, because everybody wants the money, and immediately it's sort of like a drug. They get it, but it does serve the interests of the big guys, the banks, and the government all along. So that is a condition that's going to be around for a while, because it's so tempting. This addiction is so strong, and they cannot bite the bullet on it, because really, how do you get the government to be able to print less money? And that is get the government's dependency on new money all the time. And you described how it happens. There's so many programs. Right now the Democrats and Republicans are fighting tooth and nail, and the Republicans are the conservatives. They want $1 trillion less than the other side wants. It's just so far removed from reality. And then you say, well, we have the Republicans, they're conservative. Yeah, and just look at what the Supreme Court did this week. They had a chance to say that maybe they shouldn't be in the business of giving health care to everybody, because it's not in the Constitution. And 7-2, the Republican-dominated Supreme Court says, oh no, that's all legal under the Constitution. So that's why it's not going to happen. The spending is going to continue, and it will be reined in, and it won't be reined in by another Paul Volcker with more determination. It's going to be reined in when the market does it, and that is the people are going to run out of not money. They're always going to have that cash, those Federal Reserve notes. What they're going to run out of is purchasing power, and they won't be able to produce it. Then the more money you pass out, like they did in these last couple of years, the more you pass out, the less purchasing power each unit will have, and the ball game will be over, and they will be forced into it. Otherwise, we'll be living under a total dictatorship unless we can free this up. And that is why I'm so determined that we never get rid of put laws on a cash economy, because ultimately it's the cash that will circulate in tough times, and of course I want it to be as free as possible. They want to use cryptocurrencies or silver and gold or whatever, but you have to keep it going. So liberty really is the answer, even in the tough time, to survive. And under those conditions, our government should be getting the taxes, either eliminate the income tax or get as low as possible, so that people will have an incentive to take care of themselves. Today, the craziest thing in the world is they don't even have an incentive to go back and work, even though under these precarious conditions. They was, I'm not going back to work. I get a check every month from the government. We're doing fine. I have enough money. But next month they won't have enough money, so they'll demand more. So on and on. I think I have been surprised, and a lot of people have been surprised, that you could bribe people, or it would get that bad. We're giving them welfare would be the incentive not to take a job, in spite of the fact that there are a lot of jobs out there that people just won't take.
Very good, Dr. Paul. I will finish up with a big picture overview by saying that central planning always fails without exception, and it's really not that hard to understand why. When you hear central planners, and we have them all over the place, they tell you that they're data dependent. They're going to make these decisions based on the data. But any data that they have, no matter how much they accumulate, there's always an infinite amount of data that they don't have and they can't have. So now they may write it off, oh, that doesn't matter. Just ignore everything that they don't have. No, it does matter. Everything affects everything else in this entire universe. So you cannot centrally plan unless you have the entire picture, which is impossible. They can't be God. And as Dr. Paul mentioned earlier, by definition, human choices cannot be known in advance, not even by the person choosing themselves. So even the viewers that are watching right now, you're creating data. You're watching the Ron Paul Liberty Report. It's going to go in your history, but it says nothing about what you're going to do next Friday. Next Friday, something may come up. You may want to decide to watch Liberty Report on Saturday or Sunday, or you may not want to watch it at all. And we recommend you don't do that. The point is, data is always a picture of the past. It tells you nothing about the future. The future is always wide open. The future is always for liberty, and central planning always fails.
Very good. you know, there's a couple numbers that can be useful, but you don't hear about them. If they're useful or it points out some problems, they don't want to talk too much about it. I think the PE ratio still is a hint to what's going on. And the PE ratio for the Dow has gone up almost like 30% in the past year. It's 29. And the investors are aware of the fact that the higher that is, the more risk there is involved, and it will adjust. And people have shown over the many decades, when the PE ratio gets too high, eventually there's an adjustment. So that helps, tells us and gives us a hint of an adjustment coming, and we may be seeing the beginning of a major adjustment in the stock market. But there's another thing that's available to us. The government still reports, and that is the monetary base. And it's growing. Can you believe that? You know, it's growing rapidly. In the past year, the monetary base grew 24%. That's a lot. You know, if you have a market where they're depending on gold, people say, well, there's never enough gold and never enough gold, and I use that argument. But the truth is under a gold standard, due to the market, if the purchasing power of gold goes up, there's a greater incentive to mine gold. And gold generally under those conditions had in the past expanded 2 to 3%. And that was adequate to adjust the market and regulate it, but it's all free, you know, free market pricing. But it's this rigging of the price of gold that is the big deal. But the monetary base was up 24% last year, but last month it was up 3.4%. Oh, it doesn't sound too bad, does it? Well, what about times 12? That comes out 40%. So if last year we expanded the monetary base by 24%, it's going up probably 40% now, which means that's inflation. That's where the inflation is. That's where the government has to manipulate and print and bail out everybody and also you know, rig all the markets. And if they don't for a minute really seriously consider, maybe we ought to, you know, give back a little bit of our empire. Maybe we ought to get rid of half our empire. Maybe we wouldn't have to spend some money up overseas. And then we quit aggravating and always preparing for the next war, and we have to have a lot of weapons, and the military-industrial complex agree, and they like to stir the pot. So, but this is going to end. It's not going to be end because they're all of a sudden going to listen to Chris and I. It's going to end because it's unworkable. I just hope that we can participate in making some suggestions on what it should look like if the people ever decide and believe that we have to do this and we have to change it. I want to thank everybody for tuning in today to the Liberty Report. Please come back soon.